Welcome to the weekly roundup for the week ending Friday the 6th of August. Hope that you enjoy these weekly reports. Please do subscribe to receive regular stock market content, not just weekly roundups, but also information on stocks, IPOs, and really anything that's going on out there. Right, so what's happened this week? Well, stocks in Europe and the US scaled to fresh record highs this week, really boosted by strong corporate earnings. Stock market has managed to look past the rising COVID cases as the Delta variant spreads quite quickly across the US. So investors have also shrugged off a more hawkish stance from both the Fed and the Bank of England as well. So the Bank of England are expected to keep monetary policy unchanged. However, it upwardly revised its inflation forecast to 4%. Furthermore, the central bank did also acknowledge that it could modestly tighten monetary policy in the coming years. So expectations for a rate rise from the Bank of England has shifted from early 2023 to late 2022. So FTSE set to close the week up around 1.2%. DAX is set to close the week up 1.4%. Over in the US, data's been mixed, but Fed speakers have been sounding more hawkish, despite COVID cases rising to over 100,000 a day. The S&P 500 is set to gain 0.7%, while the Nasdaq set to end the week 1.5% higher, and the Dow 0.3% higher. Over in the FX markets, the US dollar saw steep losses last week, but it's set to book a weekly gain of around 0.2%. Again, it's COVID concerns. This has driven safe haven flows into the US dollar this week, and more hawkish commentary from Fed officials has also lifted the greenback. Pound against the dollar set to gain around 0.1% versus the stronger US dollar this week, despite a slightly more hawkish Bank of England. Gains in the pound were more evident versus the euro. So euro against pound is set to gain around 0.6% this week. Euro against the dollar, it's traded lower versus the US dollar for the past 6 sessions, and is set to end the week down around 0.5%. Commodity prices, oil down over 6.5% this week, in its worst weekly performance since October last year. Again, COVID cases on the rise in the US and China, the world's 2 largest oil consumers, is really dampening spirit there. China has already imposed some travel restrictions, and the concerns are that oil demand will take the hit. Gold prices are set for a weekly decline in the region of about 0.7%. The Fed commentary dragging on the non-yielding precious metal, as Fed speakers did hint at an earlier move to taper support. Notable stocks. Well, we started off the week with Meggitt, the UK aerospace and defence stock, up 60% on a bid approach from one of their big US rivals. Rolls-Royce, they also rallied over 11% after announcing a surprise profit, thanks really to cost-cutting, asset sales, and really now we see the engine maker on track to meet forecasts despite the weak travel backdrop. Bear in mind the travel exposure to Rolls-Royce is not as big as the market interprets, with a lot of their contracts still in the defence sector. BP rallied over 5.5% this week despite the tumbling oil prices, so quite a disconnect there from the shares to the commodity. The oil giant has upped its dividend and confirmed share buybacks after posting better than forecast quarterly earnings. The strong results helped calm investors' concerns over BP's plans to shift towards a greener future. Taylor Wimpey as well. They gained over 4% this week after building a record number of homes. The house builder has said it will hit the top end of expectations this year amid a strong bounce back from the pandemic. Over in the US, we saw Robinhood have their IPO. Very volatile first week of trading. The online broker went public a week ago, debuted at $38. Has been up as high as 84, despite a very negative start for them. So that's all really for this week. Thank you very much for watching. Please remember to subscribe, and any questions, don't hesitate to ask.